Good morning, guys, and welcome to today's market update. Today is Thursday, June 11th, 2020, and it's 10 minutes until 10 a.m. in London. And my name is Alejandro Zambrano. I'm the Global Chief Market Strategist with ATFX. I'm also the manager and founder of investingcube.com. All right, good guys. So it's been a while. As you know, we did some changes to the schedule. So I do a long update on Monday, where I cover macroeconomic outlook, bunch of different markets, plus stock market and shares now. Cover some 30 different shares, US and UK shares. And we do this update now on Thursdays. So what we're gonna do now is that over the next 10 minutes, we're going to and try to understand what's happening in the markets, see what's going on, and try to provide you guys some levels to watch, which I think are important for the markets and the way forward for them. Okay, let's begin. And we're not going to begin with the euro. We're going to begin by taking a look at the German Dax and the Dow Jones. So let's see if I can show you. There we go. That should be fine. Yeah, that's fine. All right, good. Okay. So you might remember I was bullish from here for this to go upwards. In fact, it was actually already bullish from down here. And we moved up quite aggressively and we reached the monthly R2 level. It was actually higher than I thought we will do. I thought we were going to have a bit of a pullback before hitting that level, but we didn't. We went straight up. People got super excited and they all bought. Now we hit that high and people started to sell, had an initial slide, and then we went up a bit, and now we're moving back down lower again. So what's happening here then? Well, we had the Federal Reserve interest rate meeting yesterday. They didn't really say anything surprising. They're just doing what they've been doing lately, and they just support the markets. And I think people just use that as an excuse to get out of the market. I think if you just look at it, the market went all the way from the lows to the highs up with 26% in just a very short period of time, and they were just going up and up and up. And I'm on Twitter. I suggest as well you're on Twitter. You can follow people just to get a mood, to get a feeling of the market. On the way up, I was getting the feeling that people were, getting a bit too excited. And as well, a lot of the perma bears that are always bearish, they started to give up on their positions. They were like, "Oh, maybe it's not gonna come down. Maybe I shouldn't be as bearish." Like even the harder one started to become more neutral, and that's also a bit of a sign that things are getting a little bit excited. So now what's going to happen? It's going to be interesting to see what happens now. You definitely want to keep an eye what the perma bears are saying. If they're like super cheerful and they're like, "I told you so, I said it was going to happen," and they start to pat themselves too much on the back, and then again that could be an indication that it may be time to get involved. Now, from a purely technical perspective, because Twitter sentiment is just one piece of the puzzle, from a purely technical perspective, if you look at the DAX, and this is your daily chart, all right, the last major daily low was down here at 10,150, and that's why I draw fibs from the very low to the very high, okay? And we're coming down. So normally we would touch the first fib, which is right now at 11,879. And you have this cluster of support here. So that's my first spot where I'm looking at. It might be that this market just stops here and then goes up a bit and then comes down a bit. So yeah, if we're lingering around here for 2 days or something like that, then we might change levels, and then this becomes the trend defining level, and one would look to buy here somewhere. But right now, with market volatility soaring, I would be betting on this to continue to go down. So let it go up a bit, and then it's probably going to come down. Can we sell it? Of course we can sell it, but I wouldn't really do it. I don't like to short stock markets. But if you really want to be bearish, I guess you can be bearish below this high here, which is the let me see if I can load that one, which is at 12,807. So I might go up a bit and come down, but again, I wouldn't be selling. I would be waiting for this to come down. Hopefully in 2-3 days we'll be down here, and it will be carving out a low, and then the market would go upwards again. And for now though, I know it's super far away, and you might say, what's he talking about? But my trend defining level is down here, and I'm quite confident we're gonna be able to tighten this up. But for now, I'm just leaving this a bit open-ended because it's the first it's the second day really. Well, it's actually the first day of the shock here, and we don't know exactly how people will react. And I do think we can come down a little bit more. If you look at something like the Dow Jones, it pretty much looks the same. In fact, it looks more heavier than the German Dax. You have this high here from 4th of June, sorry, 26th of May. That is interesting. And if you take fib from this low here to this very high, then this is your first fib, this is your 50 fib, this is your third fib. So there is the sweet spot. That's where I would be really excited. It could be a situation, of course, where the market just tumbles, goes down to 24,808 or something like that. I don't think that's going to happen, though. I think we let it go down a bit, and then let's see what happens. For now, they're trying to find a level here slightly closer than with the DAX, and we're looking at 24,044. And let's see what happens. There's no rush to jump into this. I think at least has one more day of maybe going up and then attacking the low. And again, if it doesn't want to trade much lower, then we can deal with that in 2 days' time, I guess Monday. But for now, I think, again, we can go a bit lower. And the situation is very similar in many other markets. Now, you have things like the FTSE 100, which is already at my buy spot. But I wouldn't be jumping long FTSE 100 here because I have a view that both the German DAX and the S&P 500 can trade lower. So I would not be getting involved in these markets where you already have a nice sweet entry, because everything else of the big ones, the big heavy markets, are still looking that they can move down a bit. So I would give this a few more days, and it wouldn't surprise me if the FTSE 100 is closer to maybe 6,000 over the next few days. And then instead maybe of buying here with stops here, we can maybe get involved with 6,000 with stops slightly lower, maybe at 5,700 or something like that. So that's the way I look at this. Now let's take a look at gold. Gold is of course enjoying this little push to the upside. So we did talk about buying here at the lows. At the time, nobody wanted to buy. You know, but now obviously people did buy. This is really easy to see now. But that's the problem with trading. It's always difficult to. It's not always difficult, but many times it is difficult to take not to take a decision, but to know exactly. And as humans, we hate that uncertainty, and that's why trading is actually not for everybody. It is, you need to have a thick skin. All right, so what was the plan here then? Well, we said this is support, this is resistance, and we said this is the monthly S2 level, so people are probably going to be buying here. They're going to lift the price to the upside. Because I think stock markets can come down a bit more, I think this can go up a bit more. But if you didn't buy here already on June 7th, it's a bit too late, I think. Now, if you did buy down there, you're probably hoping for a proper meltdown. Why? Because here you can see that we're trading within a rectangle, and if we take out this high, which is 1764, we can go up with some cool $100 per ounce, and that will give you another 5.68% move. But if you bought down here and you have that breakout, then that will be an 11% move. So the question is now, what should you be doing then if you bought at the lows? Well, even though this is super tempting, you know, you maybe can give it a bit more time to see if it breaks. But realistically, to go all the way up to the high, it's probably going to take 2 to 3 weeks more, if ever. So I would keep this a bit longer and then see if we can go up. And if we struggle to take out these levels over the next 2 days, I'll probably book a better profit, if not the whole position. And then I would get involved on a break to the upside. And that's, or people that are not in the market are going to be watching as well. They're watching for that break to the high. So they're not buying right now. Well, I mean, some people are, but I wouldn't be buying right now. I would be buying either on the break or on the dip. And if when it's already long, see if we can go a bit higher. And obviously if it goes up with energy and it looks like it can continue to trade upwards, so just leave it be. If it looks like it's getting a bit tired, and if you look at stock markets, they're bouncing sharply, then I will be getting out there. All right, here are crude oil prices. So a few days ago, we said look at 37.45, and we bounced from this level. We went up a bit. And here's the situation, very similar to what we saw in stocks. So what did we see in stocks then? In stocks, we saw, as you know, this little push where things go just up and up and up and up, and you get almost no pullback. And if you were looking for a normal pullback like I was, then you are not getting that entry. It's only if you go very like 30-minute or something like that. I think not even a 30-minute. You had very super shallow pullbacks until here, and that's the background to this idea in crude oil, because up until recently everything was just going up and up and up, and we're not getting that opportunity. But the idea was, okay, if you really want to buy, this is the spot, and it will go up. If you're more of a longer term trader, you want to go in a bit more heavy, then you will need to go for a steeper pullback. You don't have to, by the way, but that's what I would have done. I'm looking for a decline to 34.50, and from here, as long as trade above 30.44, I'm quite interested, and I wouldn't mind going in more heavy here. Whereas this, I'm maybe going with half position at most. But this is the short-term level. If you're super bullish, those are the levels that we'll be watching. Okay, I think we covered. Well, we didn't cover currencies, did we? No. Sorry, my mind is somewhere else today. No, we did not cover. No, I didn't. I don't think we covered currencies. No, we didn't. Maybe we did. Should be getting a doctor, maybe. I don't remember if we covered it. I think we covered it. But we'll do it again. Euro USD, a few days ago, I've been telling people I do 2 free webinars, the one on Monday and then one on Thursday, but I do also other webinars throughout the week. And my general idea has been to buy here. I don't remember exactly what we said on Monday, but the general idea has been to be buying. I think it's the same levels. So we said buy here, book profits here. And that went good. If we go back to the lows, I think people are going to be buying again. And then they're going to be booking profits here. This is the GBP versus the USD. I did a little article about this yesterday, and I put that on Investing Cube. I said, if we take out the high, we can probably go upwards, which didn't really properly take out the high. We did spike just on the back of the Fed rate meeting, but then we went back down again. And Fed rate meeting was down and up within 1 hour. That shows that it's better not to trade that event. The alternative scenario was to buy a dip, and we'll reach that dip level, which is 126.80, and the trend is bullish about 125.77. And I think if we come down here, I think people are going to be buying, as they have been. This is an outlook I published yesterday, actually, on Investing Cube. The only difference I did between this one and the article on Investing Cube is that the trend funding level is not here at this level, is down here. So I'm bullish GBP USD between 26.80 and 25.77. I think we can go up to 27.80, see what happens there, maybe book 50-75%, and then if we go up higher, then that's cool. All right, here's the dollar versus the Japanese yen, where on Monday I was bullish above this level here, which is 108.37. You can see we traded directly below that level, and that's the benefit of a stop loss. If you nailed it, what happens is that the market does not really look back, and in this situation the market added another 155 pip stop loss, loss, and that's how you know if you put your good stop loss orders. If you put a stop loss order and then the market quickly goes back to your level, then you're not looking at the right levels, at least not for your time frame. And for my time frame, this was the right level. Of course, maybe 1 month from now will be higher. So again, it depends on the time frame you're looking at. Now, if you're looking at this from a big picture time frame, it's actually quite interesting. Well, like just look at data here from April. We were at the monthly pivot point. We had a very sharp rise, and then we reached the monthly R2, and now we're back at the S21. It's not very typical to have this sort of volatility. Now we're going down, and there's some important support levels. The most important one, I think, is 105.94 on this chart. There's also some support here at 106.67. You even have the monthly S1 here. Now, because stock markets are under pressure, I would assume this can go a little bit lower. And this is more of something where you can probably wait. If you are happy to wait, because I think stock markets are going to come down maybe 2-3 more days. So if they come down a bit at 2-3 days, but this is still trading above 105.94, then this is a bullish scenario. Okay. But the way it looks right now, because stock market's coming down, and I think they can continue to trade a little bit lower, this could potentially force itself all the way down and take out that stock. Okay, let's see if you guys have any questions. We have a bit more time today, actually. My meeting has been delayed. And if you're new to this market update, as an update we do on Thursdays. On Thursday we keep it short and brief like this. On Monday we do much longer. And the best thing is actually just to follow the ATFX account on Twitter. You can also follow me on Twitter. Okay, that's my Twitter handle. So we have Anjay. Good morning. I hope you're doing good. We have Maurizio as well. Good morning to you. And we have Anjay. Do you use Elliott waves or any form of them in any kind of your analysis that you do? I have studied Elliott waves. I bought the book, and I had a book. I don't remember if I bought it, and I think I borrowed it from a library or something. This must have been like 8 years ago, something like that. And I read the first 100 words of it, and it did help me understand and see corrections and waves and these patterns of something normal, something that shouldn't be taken as a threat, because the Elliott waves, that's all natural for them. So I understand the basics, and then I try to understand and try to do a bit of counting. But even myself, after studying this for a bit, I realized that was a bit too. It's not like 100%. You can interpret the waves too easily, and you can easily get it wrong. And I know an Elliott wave guy. I should know several, but I know one guy. He doesn't even really trust his analysis so much, so he always does a bullish wave count, and he always does a bearish wave count. So then he has these two scenarios, and then he has that little spot. So when he knows when the bullish and the bearish kicks in, so to speak. And I remember this person. He had okay. I don't remember even if he had okay trading results. He had okay. Sometimes he nailed it. Sometimes he did not nail it. So that didn't really encourage me. And then just my experience of talking with people and seeing what's available online. I don't know why, but the Elliott wave theorists, they are always trying to hit that high. They're always looking for the high. I think the most powerful aspect of Elliott waves is when you find the third wave of the third wave. So when you're in that trend, I want them to come and tell me when that's happening. But for some reason, when you look online, almost all Elliott wave analysts, they always tell me, oh, this could be the fifth wave, that wave that's going to be the peak. But it always goes way, way higher, and then it doesn't really work out. So from that perspective, I think it's useful. I think everybody should read at least 100 pages about it so you understand the basics, because it can open up your mind for a lot of things. But I wouldn't go down counting the waves. I mean, I tried, and again, it's way too subjective. It's not an objective science. A rectangle is super objective. You do the rectangle, you have the breakout, or you don't have the breakout. Is it gonna be right more than 50% of the time? Probably not. It's gonna be right maybe 40% of the time. But when it's right, you get all that big return. When it's not right, you get a smaller return. And that's what I mean, when you win big. When you lose small. And that's why I keep on using that. And so that's why I never really went into Elliott waves. As well, I remember, I don't know if you remember him, but Jamie is a guy that used to work for ATFX, and ATFX is a website I used to work for before. And ATFX at the time was one of the biggest forex websites. It's still one of the biggest, but we have other websites like FX Street that are so much bigger now. And he used to do Elliott waves extensively, and he did it for many years. But then he gave up on that. He uses some sort of combination of it, but he wouldn't be counting waves as he was doing. That's as far as I understood in my conversations with him, that he was using it for many years. He did bring him some success and some understanding of the market, but ultimately he used some other support system, some other way of using the yellow waves. So I don't really recommend them at the waves. You can read about it to understand. I think it can be an eye opener, but not for actual trading. Yeah, the problem is the subjectivity. Like you can't take three different L-wave guys and they are all going to come up with the same idea. So some of the power of classic technical analysis is that when you see a head and shoulders, everybody knows what they need to do. You just need to sell, right? And if everybody's doing exactly the same thing, then you get a reaction. You want to get into the market. You want to, like for example, if you look, we still have some time, which I'm a bit surprised, but let's take a look here. In the rectangle in the Dow Jones that we had, it was quite straightforward. You know, we had the break here, and then the market took off, and then it did look back, but overall it just went straight up. So many times what's important, I think, is that you can get in, and this is going to push enough for this to go up enough so you can tighten your stop loss. If you can get that sorted, if you can reduce your stop loss with 50% or so, then that's gonna sort things out. Because what happens here is that one buys here, and then it goes up and up and up, and then it comes down, and then it goes up. So when it on its way up here, you have a low, so you can put this at break even. If you do that, yes, 70% of the time, maybe you'll lose at break even or small loss. But then all the other times, you get that amazing push. And these patterns, they work in many different markets. So this is the Dow Jones on the daily chart you're looking at now, and I think we had something similar. Actually, this is the massive head and shoulders, and you had that push. This was the hard retest, but then we reestablished, and then you had this section here. So that. Okay, I think we need to go. I'm just gonna see if there was. I think I missed some people's. Forgot to say good morning to you guys. There we go. So I have Nick. Good morning to you. I hope you're doing good. And we have as well Daniel. Good morning to you, Daniel. Hope you're doing good. And Sarbajet. Hello to you as well. Okay, good. We're gonna wrap things up, and I'm gonna be back on Monday. We'll see how this goes. So don't forget to like the video. So we have changed things a bit, where I'm doing this longer. Like I think the video was 1 hour and 43 minutes. This one here. We'll see how it goes. You know, if you like the shorter term outlooks and more of them, then we might do more of them. Some people like this longer video. Some people, numbers wise though, I can clearly see that you prefer the shorter videos. So we'll see what happens. Okay, guys. Anyway, I want to thank you so much for your continued support and for always joining me this morning. I mean, some of you, the guys, some of your names, I know you for many years. So I really appreciate that. All right, guys, have a beautiful day and be careful out there. And I'll see you guys on Monday for the next market update. Thank you and bye-bye.